The world is becoming extremely digital. From the way we communicate, interact, and buy, the concept of ownership is going far beyond the scope of what it used to be. Traditional share trading is changing as consumer trends are shifting towards purchasing digital assets. In fact, today 1 in 6 adults have invested in digital assets. The rise in digital asset investment is only predicted to increase, with a forecasted value of $17 trillion by 2025. This future scenario is increasing companies' involvements with digital assets. Digital assets include cryptocurrencies and digital creations whose ownership is recorded on the blockchain. A popular digital creation is an NFT, or a non-fungible token, whose demand is driven by the token's uniqueness and ownership rights. These assets attract investors to buy into a company's physical and now digital performance. For example, publicly traded company Funko is one of the world's biggest creators of licensed pop culture products. Funko is planning to develop NFTs of its popular licensed characters and brands and showcase them. Due to this, MFNKO stock has almost doubled in price this year. The rising adoption of the blockchain is impacting the way consumers are trading. These shifts could potentially undermine ETF managers like Smartshares. Smartshares have 35 funds on a variety of stock exchanges, but nothing dedicated towards digital assets. Individuals access Smartshares funds through retail trading platforms like Sharesies or directly through Smartshares. Primary investors for digital assets are between the ages of 18 to 34, and 80% of Sharesies investors are under 40. According to research done by Morgan Stanley, this demographic is more tolerant to risk, therefore highlighting the potential demand young investors have for risky digital asset funds that have the potential for higher rewards. This demand has been recognised by individual digital asset fund management platforms in New Zealand, like Vault Digital. What this means for Smartshares is that if they neglect to investigate digital asset funds, they may lose customer sustainability, ultimately leading to a decreasing profit in the future. A lack of digital asset funds may render Smartshares obsolete, as other platforms serve the market first. To reduce the potential scenario risk of decreasing profits, the development of a New Zealand digital asset fund is proposed. This is to be the 36th Smartshares managed fund, which be categorised under their thematic shares portfolio or New Zealand shares portfolio. Customers will be able to purchase shares in the digital asset fund through Smartshares online investing portal, as well as the NZX brokers like Sharesies. Within this fund, New Zealanders' money will first be exchanged for different cryptocurrencies such as Bitcoin, Ethereum, Tether, etc. This cryptocurrency will then be used to buy digital assets from a variety of New Zealand companies, including their digital branding, art and collectibles. Smartshares' strategy is diversification. Therefore, offering category diversification of digital assets will reduce retail consumers' investing risk, providing Smartshares the opportunity to gain first mover advantage, establishing them as pioneer digital fund asset managers in New Zealand and under a trusted brand name. To capitalise on the rise of digital asset investment, it is advisable for Smartshares to begin developing the resources and human capital capabilities to create a digital fund. However, the timing of implementing these recommendations does carry risk, as digital asset environment is largely unregulated and unexplored by mainstream financial institutions. The long-term potential of cryptocurrencies has been recognised by Goldman Sachs. They became the first major US bank to trade cryptocurrency over the counter in March this year. The digital landscape is evolving to be a new extension of human creativity. The way we are trading is changing. However, there is still resistance to this change. These leading financial institutions and companies are building credibility for the adoption and trust of this new technology.